and therefore this bodes well for both of these companies. The project is to be executed by 2029, so good revenue visibility out there for BHEL as well as Hitachi Energy.
Absolutely, and it's from the renewable power space. It just tells us in which direction we're all heading. Well, Makshi, thank you so much for that big project between Gujarat and Maharashtra on evacuating renewable power there. Okay, so I think we are set for at least a positive start. I mean, the GIFT Nifty has been indicating a positive start. The pre-open is 120 points higher as well.
While we wait for the pre-open to settle and, the market's just about 15 seconds in opening, the stocks that really stand out are the telecom stocks. After a big beating that we've seen on Vodafone, that stock with some relief is settling about 10% higher on pre-open. And as a result of which, the ancillary beneficiary of that is Indus Towers, which is up around 4% as well. So those are ones that we'll keep an eye out on. We have the opening bell.
Okay, so about 90 points higher is how we've kicked things off. 24,300 is on the radar. But let's see if it will hold or not. The Bank Nifty is very quiet. Mid-cap index up about, again, 0.3%. It's slipping. It's a bit of a slippery start, one would have to say. Anyway, let's quickly count the gainers for what we have right now. It is telecom, like Mangalam pointed out. So even on the Nifty, Bharti Airtel is your top winner, 1.5% up, because the companies will not have to now provide bank guarantees for spectrum that they acquired before 2022. Aside of that, Lever is reacting quite well, 1% higher. Obviously, the ice cream business is a small part of their business, but nonetheless, it is some value unlocking that's coming through. There's ITC that's up and about. BEL is reacting positively, perhaps, to the JP Morgan report that Nimesh just was talking about. ICICI Bank, TCS, these are some of the early stocks which are managing some traction. Reliance is up about 0.3% as well. So now we've settled to a more quiet, more somber 60-point kind of a gain. Let's see what's not working. Some of the economy-facing / PSU names are cooling off after yesterday's big run. So ONGC, NTPC, L&T, Power Grid, these stocks are taking a bit of a breather. SBI is also flat for the time being. Adani Ports is lower. Remember, a lot of the rating agencies, including Fitch, have been raising concerns on some of the Adani Group companies, given the developments in the US. That's weighing on some of the stocks, at least as of now. So not bad. It opened up with a big pop, but now it's settled to a gain of about 65 to 70 points on the Nifty.
Not bad at all. In fact, we're getting some support from the IT pack, so that's good news, because yesterday it was slightly shy of, supporting the index in an otherwise good day. So Infosys is now moved to the top of the table when it comes to Nifty gainers. ICICI Bank doing extremely well as well. Infosys was one of the lone, heavyweights on the index, which underperformed in yesterday's trading session. We spoke about, the telecom stocks, but just keep an eye out on the FMCG stocks as well. Colgate has opened about 1% higher. ITC is about, 0.75% higher as well. So a lot of these FMCG staples doing extremely well. In the broader markets, the stock that, Vamakshi spoke about, BHEL and Hitachi Energy, joint venture has gotten a letter of intent for a Khavda-Nagpur HVDC project coming in from Power Grid. Look at Hitachi Energy, that's up 6% straight off the bat. Transformers and rectifiers, another stock which is doing extremely well. So a bunch of these infra names continue to do well. Zomato, it was likely to open lower largely because of the big discount to its yesterday's price that was on offer when it came to the indicative price of the QIP, but that seems to have been bought into, and the stock is now about 1% higher, telling you that there is strong demand for the paper that Zomato is giving. And it's not just Zomato, Swiggy too is up around 2.5% on the back of that positive note that has come in from UBS. On the stocks which are seeing some bit of profit taking, we have the likes of Raymond, which after a big move in yesterday's trading session is seeing some bit of profit taking. We are seeing Imami also, after a decent move that we've seen yesterday, seeing some bit of profit taking. Gillette as well was up in double digits yesterday, has opened mildly in the red. Dips, whether they get bought into or not, is something we'll watch out for. And in the financials, we do have, REC, which is slightly in the red, Canfin Home slightly in the red, AU Small Finance Bank is the other one that I'm looking at. But by and large,
7% HVDC, Renewable Energy Connect between two states, Gujarat and Maharashtra.
I'm just personally very excited to know what M&M does today, because the stock was doing extremely well yesterday.
EV launches,
and then you have the EV launch that comes by today. Yeah. It's slated for, the display to public and the pricing, etc. All of that will come by this evening itself. The stock has done extremely well this month. It's up around 12%. This year, it's, nearly doubled shareholders' value. But ahead of that launch of a new category and prices, etc., we've seen those ads. The car looks fairly snazzy. Does the actual product live up to its hype or something? Is something we'll watch out for.
But the kind of trust that M&M has built as a brand in the SUV space, can it replicate that and build on that in the EV space? I think that's the biggest question. And a lot of people are waiting to see if the company can transition into being a premium EV player now. Premium SUV/EV player now. So let's see. Interesting one on the radar for sure. Let's take the conversation forward. Market settled with a gain of about 80 points, so not a bad opening at all. We have Ashwini Agarwal, founder and partner at Demeter Advisors with us. Ashwini, great to have you on as always. We're living in very, very interesting times. We wake up to new tariff announcements, new geopolitical news and announcements, and so much more, right? But what do you think? I mean, it's been about 2 months of cooling off. November is now drawing to a close, October, November. Sobering months for the Indian market. What lies ahead? How do you think we'll end the year?
If you think about it, what's happened over the last couple of months, it's been, multiple things that have come together. On the fundamental front, the consumer demand environment has been weak, which has led to a significant earnings miss in aggregate for corporate India. In addition to that, there has been a significant supply of paper, both from the IPO markets as well as from FII. So, purely from a demand supply perspective, the demand from the mutual funds, while it has been robust, has been struggling to cope with the supply. So how do I see things going forward? I mean, I think, the narrative right now in the short run appears to be that US remains one of the most interesting places to invest. And that's obviously taking the shine of, markets like India in the short run. I think in the longer run, the economy and the earnings will rebound. My sense is first half was a little bit unusual because, we had a lot of slowdown in government spending. You had truant weather, excessive heat during the summer, followed by excessive rain, and a wedding season getting shifted to the second half of this financial year for some Hindu calendar reasons. I'm not very clear how that works, but that is how I'm told it is. And I see some demand rebound happening in H2, but I think because the starting point of the valuations were high and the earnings disappointment has set in, the market will wait to see an earnings recovery before it takes a big leap upward. We found some sort of support at about 10% below the highs for Nifty, for example. But I think, this is similar to what we saw in September 21 to March 23 period, or more specifically September 21 to June 22 period, where we may hang around here with plus minus 5% on the Nifty for some time.
All right, earnings looking to rebound should come as a bit of a relief, but what comes as a bigger relief, and our ticker team will just speak about that. Moments ago we did get that flash that the RBI Governor Shaktikanta Das has been admitted to Chennai's Apollo Hospital. Now we have the RBI official statement in saying that he did experience some acidity and was admitted to the hospital for observation. He's doing absolutely fine and will be discharged in the next 2 to 3 hours. So that is some relief coming in on, there were fears when the news did come by. So this is fairly good news, and we wish the RBI governor very, very good health as well. But let's come back to the market. As we were speaking, the Nifty's piled on some of the gains. It was up around 70 points. Now it's about 100 points on the up move, with decent traction seen on names like BEL and further pickup in the IT pack as well. LTTS was one of, Mitesh's picks on the long side today, and that stock too is continuing to do well. LTI, Mindtree, Tech Mahindra, Infosys, all of them also picking some pace. Ashwini, I remember you saying that some sort of correction was expected. The correction has come by. You did like a couple of tobacco names in the past as well. We've been talking about the FMCG staple space. How are you positioned on the market right now? With this decline, did you add on to some of the names?
So Mangalam, yes, I did put some cash to work, but my approach has been very bottom up, and that's how at least I'm looking at things. So I'm looking for companies where I see high visibility of earnings over the next 2 to 3 years and reasonable entry point on valuations. By reasonable, it's very subjective, so it depends on the sector and the industry. but I'm definitely looking for earnings growth. So I continue to find earnings growth on a bottom-up basis in pharmaceuticals and some auto components and some chemical companies. In financial services selectively. Though I think the MFI space will continue to provide headwinds to the overall banking and financial services space. So we'll see how that pans out. So those are some of the areas that I'm looking at. Some textiles exporters, for example, are talking about very robust order book indications from their customers in the US. So exporters as a basket, especially US oriented exporters, should do very well. So those are some of the areas where one can look for ideas, and that's what I've been doing.
So exporters as a basket, could you get a little more specific when it comes to, the categories here? Because you did speak about pharmaceutical, you spoke about textile, but there are a lot of infra names as well which are looking to export to the US. Are you in the camp of any of those?
Yeah, you could. I mean, there are companies. So I don't want to take any individual names for obvious reasons, but there are companies that are exporting, and if exports is a substantial part of the revenue, then you will see tailwinds. And there again, last couple of quarters, you saw significant delays to shipping because of the Red Sea crisis and higher shipping rates, and some of that has started to normalize. And the working capital cycle has also normalized, so that benefit will also feed through. So yes, I would say if the exports is a significant number or as a percentage of the total revenue, then it makes sense. But in infra, the only caveat I would have is that most infra companies in India have a significant government exposure, and valuations are not easy to digest. So for an investor like me, those don't work. But yeah, that's an area you could look at if you can address the concerns around valuations, exposure to government, etc.
Speaking of exposure to government, what about government itself? I mean, the companies that are run by it. There's a debate out there, actually, whether some PSU stocks, maybe defense or railways, whether they deserve a bit of a relook. Now that prices have cooled off 25 to 50% in some cases. JP Morgan today put out a note, for instance. They're rallying behind stocks like, Hindustan Aeronautics, BEL, and a bunch of others. What's your view?
Okay, so great question, Survi. Thank you for giving me that cue. What I really like in the PSU space are the PSU banks. I think the PSU banks will do reasonably well over the next couple of years at least, because they will continue to experience very muted credit costs because, they've been late to the cycle of the cleaning up. So the recovery cycle for them will continue to feed through to lower credit costs over the next couple of years. Also, what you're seeing with them is that as government expenditure increases and some of the new investments in India come through, you'll probably see an improvement in the loan growth as well. And on the deposits front, they're very well placed, and valuations are still quite reasonable. So that's one space that I like. And you're right, in some cases, in the defense or electronics manufacturing areas, stock prices have taken a huge beating, and now they might be approaching, some sensible valuations. I haven't, dabbled in that area yet, but yes, it does look interesting. You're right.
All right. What about, the non-PSU infra names? The street believes that post Maharashtra elections, there would be a fresh impetus to capex once again. We've seen a couple of these decisions that came by overnight. The cabinet has approved close to around 8,000 crore worth projects in the railway space itself. So what do you think of the rail stocks and some of the other infra names?
So, Mangalam, like I mentioned, I'm very sensitive to entry price and entry valuations. So, if the valuations at the upfront are expensive, then I don't want to go in there because, then what happens is you need everything to go right for you to make money. Because otherwise you have an earnings miss and a PE derating, and it's a very powerful combination. Unfortunately, for a lot of the infrastructure names in the area that you mentioned in railways in particular, starting point valuations continue to be quite expensive for my taste. So that's one challenge. The other one is that while that problem has historically not been there for rail, domestic infrastructure companies have significant exposure to government, and government payments and government disputes in the past have derailed many such stocks. So, I continue to be a little bit wary. Yes, there might be opportunities out there. I'm not denying it. But, the way I think about it is that there are other areas where I can find better risk-adjusted returns. So why bother?
Ashwini, we haven't touched upon the mind and the might of the consumer at all so far. And I think this remains one of the most interesting aspects in the market today, right? Whether there is a slowdown, not slowdown. Is rural better? Is metro urban consumption slowing down? And then the channels themselves. There's just too much going on.
Yes.
Do you like anything over here, whether the platform companies or the traditional retailers or the guys who are making all the products, FMCG? What are your thoughts on consumption and what part of it would you play, if at all?
Okay, great question again. So I think, the debate is really whether the slowdown is structural or cyclical. My view at this point in time is that it is a little bit of cyclical more than structural. And therefore, I'm hoping to see some recovery or rebound in the second half. Now, whether it is rear-ended or it is front-ended, I don't know. Coming to which areas that I'm looking at, I'm typically focusing on the top end of the consumption pyramid. I think that's where the sweet spot is, and that continues to be where I tend to focus on. So, there are several players out there. There are people who retail, expensive products, whether it is watches or it is saris or it is cars or so on and so forth. So, some of those things could be interesting if you can convince yourself that there is a moat around the business. And that's a very key thing because, like you mentioned, there's a lot of disruption taking place in retail. And if your business, if you're looking at a business that is prone to a disruption or is or can or may not exist 5 years down the line, then you have to be careful about what you pay. So that's one area that I'm looking at. The other one I would talk about is real estate. In my mind, real estate cycles tend to be very long ones, typically lasting between 5 to 8 years on the upside and 10 years on the downside. That's at least been the experience for the last 3 decades. And we are relatively early into the real estate cycle. So I think, real estate stocks may continue to do well. Yes, they've had a massive run and, we are seeing some slowdown of demand, but I don't expect that real estate will let up anytime soon. That's my personal view.
Ashwini, thank you very much for joining in. Just yesterday, we had one guest giving us this data point that in 2000, 87% of the household money was spent on essentials. The number came down to 79% in 2022, and it's expected to further decline to 61% by 2030, just basically indicating that discretionary spending has picked up in a big way. But thank you very much for joining in. Now let's turn our attention to the auto financiers, which have been under stress for most of them, in fact. The AUM growth, disbursements, net interest margins have witnessed a decline. So is the pain cropping up? Until when will the slowdown last for auto financiers? To discuss this and the way forward, Umesh Rivankar, Executive Vice Chairman at Shriram Finance, is with us on the show now. Thank you very much, sir, for joining in. First, if you could talk about, have you seen a slowdown at your end? And what is the outlook now for the second half of the year in terms of AUMs, disbursements, and growth?
Yeah, good morning. We have not really seen any slowdown in the credit demand. The credit demand has been steady for us, and I feel even the festive demand was quite good across the urban and rural. So two-wheeler or tractor or even passenger car demand has been reasonably good. So we feel that we'll continue with what we have done in the first half of the year, that is around 17 to 18% growth. Minimum of that is possible because the second half looks a little more better in the rural, because rural there has been some buoyancy with the crop being output being higher, agri output being higher, and MSP definitely has helped.
Right. We've spoken to a bunch of credit rating companies, etc. as well, and a lot of the other auto financiers who did say that there was some pressure on disbursements and they did see a decline in their AUM growth rate. But maybe that has to do a lot with fresh cars as against used CVs. So I just wanted to understand a couple of things from you. How have the prices in used CVs trended over the last couple of months? How are they expected to move going forward? Because a large part of your AUM growth has also come in from the price increase as against, just volumes.
Yeah, the price increase over the last year, if you see, it has been quite good. See, like, over the 3 years, if you look at prices on an average has increased by 30-35%. That has really helped us in our volume growth. But at the same time, the further increase in price in last 6 months has not happened. That means the inflation and the technology upgradation that actually increase the price will no more help going forward in the next year. Next year, the numbers have to go up. So I believe that there will be good demand as the government spend increases. Because right now, in the last 6 months, one thing that has been a little muted is the government spent on the infrastructure. Once that happens, there will be a much bigger movement of goods.
So this 17 to 18% growth that you foresee in the second half, how much of that would be price-led? How much of that would be volume-led?
It will be mostly price-led. This advantage will be there for this full year for us.
Okay. So Mr. Revankar, we've discussed growth. I want to spend a couple of minutes now understanding what your view is on the whole worry surrounding potential asset quality issues building up. Right now, it's an MFI. We've seen what MFIN is doing. They're talking about, making lending norms more prudent, and it's great to hear that. They're looking at limiting the number of lenders a borrower can have or the number of loans one can have. Now, while, of course, CV is a big part for you, you do have exposure to the MSME space, to personal loans. Incrementally, do you see any sign of distress, any delay in payments building up? So far, till the second quarter, your asset quality has been absolutely pristine.
I don't see any kind of deterioration in the MSME lending. It has been doing well. And all our MSME lending, most of them are against the collateral. So we don't really see that kind of a situation. But personal loan, our portfolio is very small. We are not seeing any kind of deterioration there because we lend to our existing customer only who have repaid. That means I don't have the customer has a track record with us, and they're not new to us. So to that extent, we are safeguarded on personal loan. But overall, if you see, wherever there is an inflationary tendency, the personal loan over the period get deteriorated because people borrow more for consumption, and that will get into a challenge if further borrowing becomes a challenge. So that's a natural, wherever there is an inflationary tendency, that personal consumption loan can get into problem if the further getting loan becomes difficult. So that is a situation probably there in certain markets, but not exactly in all market. In few geographical location, only we see this tendency.
No, the worry, sir, was that, if someone... borrowers are spread across different institutions, right? And even if there's an MFI borrower or a rural borrower who's taken multiple loans, maybe personal loans, maybe even an MFI loan, and also a CV loan from you for a two-wheeler, etc., and whether it's a domino chain, whether it starts impacting the system across the board. So you're saying no such issues. So just some guidance on credit costs, on asset quality. I mean, as of the second quarter, you were at about 5.32 gross NPA. How do you expect to close the year, credit costs and asset quality?
And let me make it very clear that people who take loan from the microfinance are never the customer with us, because person who takes loan on asset, buying a two-wheeler or a vehicle loan, he will never have additional loan from a microfinance company. That's not the case because they are two different set of customers. However, I should say, we are confident of improving on our credit cost. Already our credit cost is around 1.87, and we are quite confident that we'll be able to maintain it below 2 throughout the year.
Okay. So you are, hopeful to maintain your credit costs below that. You've been also slowing down, sir, on gold loans. How do you, and even personal loans, how do you expect the growth rate for gold loans and personal loans to pan out from here?
Now, we are very confident that gold loan will grow in our book because we are making more branches to do the gold loan because we need to build a branch with some kind of a safety standards for making the gold loan. So we are actually adding more number of branches to gold loan. So therefore, we are confident of increasing our gold loan portfolio. Same may not be the case with the personal loan because since we lend to only our existing customer, it may not really grow. Last year it grew because it was from a low base, but this year onwards it may not really grow in a big way.
Right.
So is there any guidance that you can give on gold loans at least? You're saying it's going to grow. Are we looking at low single digits, high single digits?
No, it will be definitely double-digit growth.
Double-digit growth.
All right, double-digit growth. Just a two-part question. One, since you lend only to your existing customers itself, I wonder if you've done any analysis on how the indebtedness of your customers has changed over the last couple of quarters. Are they more leveraged now versus earlier, or the level is the same? Just that is one. And secondly, going forward, what are the kind of margins that you would make on the loans that you would give? Because you've been doing well as against everyone else in the industry. What is it that you do differently?
See, basically, when we look at credit bureau, what we call credit bureau reporting, we do see some of our customer having gold loan outside beyond Shira. Otherwise, we don't see them borrowing from any microfinance company. Definitely not the vehicle customer, whether it's a two-wheeler or the commercial vehicle owners. So the indebtedness is limited to gold loan, which is a short period loan, and which definitely get repaid within 3 months to 6 months. And the multiple loans which we try to factor in the first-time borrower, that probably would have borrowed from the informal sector, which we may not get reported, but that we try to do with a credit check by visiting their home and see whether he has borrowed from any other source. And normally we make it doubly sure that he doesn't have any other loan outside, and then we lend. So generally, we are very clear that customer has not taken any other loan before taking a loan from us.
So finally, okay, so your point on asset quality, checking the sort of, the health of the borrower, all very well taken. Finally, two big numbers, FY25, AUM growth expectations and margins, net interest margins. Where do you think you'll hold them?
The growth would be around 17-18% AUM growth. And margin, we would be able to retain at a particular level. We're trying to be at the present level, which is around 8.79. And we should be able to hold it for the full financial year.
All right, take that point. Thank you so much for joining in and giving us the outlook on the year going ahead. That is Shriram Finance, not as perturbed as some of its other peers in the vehicle financing and overall, business lending space itself. And that explains why, the stock has also moved higher as the management sees no near-term concerns, maintained their AUM growth guidance as well as their credit cost improvement, along with NIMs being at around that 8.8% mark itself. The stock, after being among the top Nifty gainers yesterday, has now moved higher, up around 1.5% post the management commentary as well. Let's move on and let's talk about Krishna Institute of Medical Sciences now. The stock has seen a good year with a near 50% surge in their stock price, but the management plans to add about 1,800 beds in the next 2 years. How's the business momentum shaping up? What's the outlook for the second half? R. Bhaskar Rao, who's Chairman and Managing Director at KIMS, joins us now. Thanks a lot, Mr. Bhaskar Rao, for joining in. The second quarter, we did see occupancy come down as a proportion, but that's largely because the base increased as well. The third quarter, seasonally weak for the hospital industry. In light of that, what kind of occupancies should we expect in Q3 and Q4? And what is the expected, average revenue per occupied bed here?
So actually, whatever we have done in the quarter two, even though quarter three is weak, but we are still expecting the same growth because of the new facilities that we are adding. And we are confident the RPOPs also will definitely better than the existing because of the highly complicated cases which we are taking in a quaternary care. definitely that will be able to help. Even though as you mentioned, the occupancy is not a number that ALOS, if operational efficiency improves, the average length of stay will come down. That will be able to improve the available of beds for more patients.
So would you like to put some numbers, sir, on the occupancy? The occupancy rate as of Q2 was 49.7. What could it average in the second half of the year, Q3 and Q4? And even the average revenue per occupied bed, which has been on an uptrend, currently stands at 38,200, 250, 260 thereabout. Can we hit 40,000 very soon?
So the important thing here is the occupancy will definitely, if you're able to take the existing beds, it may increase a little bit. But if you take the consolidated where we have put this QNRI and Nasik is operationalized, and if you take on the whole, it may be same or maybe a little less. So as on today, existing beds, definitely there will be an improvement, both the quarters in the moving forward. That's what we are expecting, even though it is a lean period. And the average revenue per operating bed also will increase to 30, maybe 40 we can able to touch.
All right. You know, some of the things that keep you stronger than some of the other players is your oncology and renal business, which is the specialization. So as a proportion of your overall sales, how much will that continue to grow at going forward in the next couple of quarters and as new facilities come on board?
See, basically what happened from day one when we started from the inception, we were been concentrating on 6 specialties. That is the cardiac sciences and the renal sciences, gastro sciences and orthopedics and neurosciences. Then initially the oncology was not there. Out of all these 5 things, and then what happened, all those things are equally growing. Whatever is the percentage that was going, nearly cardiac sciences were around 20%, neuro was around 10%, gastro was around 5-6%, and the renal was also 80%. Later on, when the diseases is increasing and the aging is increasing, we added oncology. As of now, we have in 2 units only oncology is running. There is in another 14 units we are going to add the oncology facilities. And the beginning, it was not, the women and child was not there. That also added about 3-4 years back. Women and child is also in multi-specialties is picking up. The growth from women and child and oncology will be much more than when compared to the other. But in spite of growing these 2 things, the dilution will not come into the other specialties. They also keep growing in the same pace. These are all the 5-7 branches where we are being very, very confident that these will continuously to grow. Wherever we go and we are opening up the new branches in other areas, and definitely we are focusing all these areas.
Just a word on the ARPOBs, you said they will touch 40,000 by when?
Maybe in the couple of quarters. See, this is not a predicted one. It all depends upon how the complicated cases that comes and moving forward. Now we are being more caring of the quaternary care. I am very confident because the oncology is going to take up in a big way in the next 2-3 quarters. And women and child also we are adding in few branches that also will take up. That's why the growth will come from there. The ARPOBs will increase.
Sir, you are commencing 2 hospitals in Kerala in the current quarter. And then in Q4, you'll operationalize beds in Thane and the Bengaluru hospital. So there will be an increase in the overhead costs. Will you be able to maintain margins at 27 to 28%?
See, as of now, all of them have been boarded, most of them, and in spite maybe a little more we can able to add. I think we should able to maintain the margins.
Just a final question before we let you go, sir, and this is not on Kim's, but this is on another holding that you have, which is on the bourses. It's called Somdutt Finance Corporation, where you hold about 64% stake. The company, you know, announced a rights issue with their second quarter results as well. I wanted your thoughts on what the plan for this business is going ahead. And this is at a time when a lot of these NBFCs or microfinance institutions are facing some sort of stress. So do you have an outlook on that?
See, basically, the Somnath Finance, what we have been, even before also, we have been commented that one of my relative wants to start because he basically needs funding where to be able to help them. But that I may not be a very totally involved in that, and we have been put the right professionals there. They will grow on its own slowly, and also sometimes it may also if there is a requirement for the subsidiaries required funding, that also some bill discounting and other things may also help. But there is nothing to do with me full time I can able to spend on that.
All right.
It's
take that
just
point.
like an investment.
All right. We take
I
that
know
point.
it is
Thank you so
according to you, it is a stressed sector, but still the young people will be able to grow slowly. The stress will comes. I always believe if you're able to understand the sector better, and if you are not able to overstretch, and you understand what is the NPAs and other things, is I was seeing in the before also.
Right.
And I don't think any business will have any problems. When most of the times we cannot able to say a sector is good, provided
Right.
if you're able to do not be too greedy, or should not expand too fast.
Right.
That
Take
is the
that
way
point.
we will be. Yeah.
Take that point. Thank you so much, sir, for giving us an outlook on your own business and your personal investment, which happens to be on the listed space itself. We wish you good luck for the next couple of quarters, and also the expansion that you've embarked upon with a higher share of revenue coming in from women and child going forward. We take a short break. On the other side, we do have Krishnamurthy Subramaniam of Afcon's Infrastructure joining in to discuss infra projects, whether they will see any pickup post Maharashtra elections and their second quarter numbers.
Welcome back. Well, we are putting the spotlight on the infrastructure space all over again. Now, the BJP-led Mahayuti win in Maharashtra is expected to provide a big boost, a fillip to infrastructure in the state itself. And of course, perhaps it'll have a sway on the way policy evolves and more orders are given out even at the center level. So what would this mean for a lot of the companies in the sector? How is the second half looking like? To address all of these questions and issues, we have with us Krishnamurthy Subramaniam, Executive Chairman and Executive Vice Chairman, and Ramesh Jha, CFO at Afcon's Infrastructure. Gentlemen, great to have you on. Thank you so much for joining in. And there's so much to talk about in terms of your own business in particular and what Maharashtra really means, what this win means for the hopes of infrastructure in the state. So, Mr. Subramaniam, if I could start with you, your total order book, including the L1, I think is running into over 40,000 crores, 43, 44, if I remember correctly. What is your exposure, the exposure to Maharashtra as a percentage of the order book?
Maharashtra would be around 20,000 crores in this.
Okay. So when you talk about infrastructure-related policies, what would your ask be? What would you like to see here? And which are the major projects, if any, that perhaps went into a bit of a cold storage because the state went into election mode? How's the pipeline looking like in terms of big projects in Maharashtra?
The pipeline is pretty good. There was a small lull because of the elections, but now there will be continuous award of contracts with Mahayuti going to be in place. So it's going to be a very comfortable situation.
And which are these major projects? So if you could tell us a little bit, some more color on which are the marquee, Maharashtra projects that would interest perhaps you, that in general would be big projects for the state and the country, the upcoming ones.
We had a couple of water supply projects for Bombay Municipal Corporation and two major road projects from MSRDC and a couple of, road and bridge projects for MMRDA. These are the marquee projects, and some more projects are expected to be bid subsequently. And that's how it's.
Jha, what would be the size of these projects that are upcoming in Maharashtra that you would be interested in? Could you put a number to that? And even the overall pipeline. Yeah, go ahead.
Sorry. Most of the projects we bid are 1,500 crores plus. That's the range in which we operate. So that's the size.
No, sir, in terms of
okay, so each project is about 1,500, but on a consolidated basis, say in the second half of the year, what would be the overall size of projects that are coming up for bidding, which you are interested in Maharashtra and even on an overall basis?
See, up to September itself, including L1, 19,000 crores order booking has been done by Afghans. So another 5,000 crores we are targeting in the balance period. So here we are expected to do around 25,000 crores as against our guidance of 20,000 crores for the year.
Okay. Now, I think, let me come to Mr. Jha as well. Mr. Jha, I think the number that we were also trying to get at was from a total opportunity perspective, I mean, for Afghans, for all infrastructure companies. What is that big number, if you have a rough number, which could be the Maharashtra infrastructure opportunity, projects that are going to come up for bidding, say, over the next 12 to 18 months. So would you have a rough estimate?
In Maharashtra, last 1 year or so, they have already done bidding in the range of, say, 60 to 70,000 crores. And that's where our executive vice chairman was talking about that we have already backed close to, say, 8 to 10,000 crores, where we have already received the order or we are L1. And some of the projects, the bids were not opened. So going forward, we expect those bids to get opened. And the state government is quite bullish on building the infrastructure. So, and with a stable government, I think we don't have any number per se from the Maharashtra because they have already awarded sizable amount. But if we talk about a medium term, the company is looking at, we have got a total addressable market of, say, around 3.2 lakh crores. Including Maharashtra, India, and overseas market where we are interested. So that's a very sizable market we are looking at. And if we talk about Indian market per se, in India, the central government and state governments put together, they have talked about some 11 lakh crore project. And the markets where we are interested, like neighboring countries, there are a lot of projects upcoming. In Middle Eastern market, where we are interested in Saudi Arabia and some of the select projects, that market is also going to grow at a much larger pace than some of the other markets. We are also looking at projects in Africa. We are looking at projects in Eastern European countries. So those are the markets where we are interested, and we are looking at a very, very sizable market.
Right. Just to further that point, you said typically there are 70 to 80,000 crore worth bids that annually take place in Maharashtra. Of that, how much have you been winning in terms of market share, if you could give us a sense?
No, you want to answer?
So, see, what we have already received, we have received close to 8 to 9,000 crores worth of order in Maharashtra already we have received. And I don't think, on an annual basis, the state government is going to incur 60 to 70,000 crore of project. So these are long gestation projects, and they would also like to see how the execution and projects are progressing. And then they will look at some new projects upcoming. So we have already got of that 70,000 crores of they have awarded, we have already received in the range of 8 to 10,000 crores.
Okay, let's talk about some company-specific details as well. The opportunity size is massive, like you mentioned, right? India and some of the overseas markets put together. But I think the street wants to see more execution as well. You've already guided for FY25 to be slightly sluggish. So just run us through the pace of execution as well. Can we expect at least H2 to be a little better than H1? Or will this be a completely flat year in terms of revenue? And then what do we expect in FY26 and onwards?
This year is expected to be a flat year. That could be a marginal improvement in FY25. FY26, we expect a 20 to 25% growth with a probability towards the higher end of the spectrum.
Right?
Okay, so historical growth rate has been about 15% for you, but you're saying in FY26, growth would be higher at 20-25%. And what about margins in H2 and next year? Can you do margins of 15% plus?
We have been giving a guidance of 11% plus EBITDA. And that
Sorry,
has been our
11%.
guidance. Yeah, although we have achieved more, but our guidance is 11% plus.
Sir, just a word on metro, because you do a lot of metro work, right? Underground as well as elevated. And I did notice a lot of that has happened for the Delhi metro. I don't know how active you've been with the Mumbai metro and whether the metro in the city and in other parts of the state, whether that is going to be a big opportunity for you. Just kind of give us some color on the breakup as well. I remember last time when we spoke, you mentioned, for instance, marine and hydro, underwater, these are the higher margin contracts for you. So as you look at the bidding intensity going forward between marine, metro, roads, what are the kind of projects that you will chase more aggressively?
Metro projects will continue to be a priority for us, particularly underground metro, where the margins are expected to be better and where the technology plays a key component. And Maharashtra, we are only working on few metro projects because of our overexposure to metro projects in other parts of the country. But in future, whenever the other phases of metro comes in Maharashtra, we would very actively participate in that.
Right. Final question then on your net working capital days. You said that you sustain between 60 to 70 days. They were 63 when we last spoke. And your domestic export ratio, which has historically been 70 to 30, this time around exports came down to 26. Where do both these numbers settle going forward?
See, usually the net working capital in the Q1 and Q2 remains at an elevated level. And these are numbers which needs to be looked at on annual basis only. So at the moment, these are still at the elevated level, despite the order mix undergoing change, domestic and overseas. But our project selection plays a very key role. So at the year end, the kind of guidance we have given will be landing in those ranges only on the net working capital side.
And Ramesh, just a final, some tentative guidance also on the order book. Right now, you are at, I think, around 34,000 crores. If I exclude the L1, how are you likely to end the year? And sir was talking about, more interest in metro projects. I don't know, is there anything coming up for bidding in Maharashtra, metro?
So in Maharashtra, at the moment, we are not looking at any metro in the near term, but we'll have to see how it pans out. But as far as order book is concerned, you have rightly said, September ending, we were around 34,152 crores. Subsequent to that period, we have backed a couple of projects, LOI has been received. With those orders, we are somewhere around 38,000 crores, to be very precise, 37,900 crores. And we are L1 at the moment in 7,400 crores. So we are somewhere around, if we include L1, we are somewhere around 45,000 crores. And as we expect, we will close the year with a confirmed order booking of somewhere around 40,000 crores, 42,000 crores.
To be executed over how many years? Is that a 2-year execution cycle, 3 years? It covers you for how long?
Normally, our book to build ratio varies from 2.5 to 3.5. So take an average of 3. So the existing orders would be lasting over a period of 3 years. Of course, there will be fresh orders in the subsequent years, which will be increasing the turnover further.
All right, sir. Thank you. Thank you very much for joining in. Wish you all the very best. And thank you for laying out the picture for us over the next 18 months. Back to the market technicals. Flat, but with a positive bias now on the Nifty and the Sensex. Mitesh is back with us. Mitesh, your thoughts in the first hour and how would you approach trade? What would you do?
Yeah. So I think there was some pullback, but I think, as I said, this choppiness will continue. 24,350 is the pivot on this spot. And yesterday, the Nifty, had a high of around 24,351. And today also the high was 24,343. So 24,350 is an important level. Till then, I think it will do a range of 24,150, 350. I think try to buy it at lower levels and try to take profits around 24,320. That's the way we'll approach it. And on the stock side, I have a buy on granules. With a stop just below levels of 574 for targets of 610. And City Union Bank, I think, it's given a good pullback and now is again looking up. So buy here with a stop at 174 for targets of 182.
Okay. Thank you very much for that. Get into a break. On the other side, Manisha Gupta will be joining in to talk about commodities. Stay tuned.
Welcome back. Well, the equity markets have been holding up. Let's figure out what's happening with the commodities. We've got Manisha Gupta joining in. Manisha, hi again. You were earlier telling us that there's, in general, a bit of a cool-off happening. What's catching your attention right now?
Well, I'm looking at the crude oil prices because $2 shaved off overnight, and we're looking at some resistance, some buying on the lower side at this point in time. You know, it was 3% of decline on Monday, and this is after 5% of gain in the previous week. It is as volatile as it can get. The strength in US dollar index is yet another thing that's weighing onto the markets. We are back above 107 onto that one. Well, the street is looking at Trump planning to raise tariffs by additional 10% on Chinese goods, 20 to 25% on goods from Mexico and Canada as well. That would mean inflation. That would also mean higher prices. But what would it do to demand is something that the streets really seems to be analyzing at this point in time. Also, reports of Israel and Hezbollah ceasefire agreement have taken the premium off the prices. Markets, though, are keeping an eye on the escalation of war between Ukraine and Russia. Apart from that, Iran also has announced plans to expand nuclear fuel production, and this could bring more sanctions from US on Iran. So that's also a developing story there. The other thing is really about OPEC and allies, which have a meeting on 1st of December. This meeting now has been turned online. They wouldn't be going to Vienna in person there. And the fact is that you could be looking at production increase being postponed yet again in the month of January. This could go on for Feb and March as well. This is yet another thing that's taken some prices off there. Well, apart from that, the Trump transition team could approve export permits for new LNG projects, increase oil drilling. We have seen issues on offshore and onshore because of that. So if that starts to come in as well, that would mean more oil supplies from US. Even at this point in time, at 13 million barrels per day, the US crude production is near record highs. The UBS, in the meanwhile, says that the Brent crude prices will continue to trade within this range. $75 per barrel is an average that they see for the rest of 2024. For the markets, it's going to be a truncated week. Remember, Thursday is a holiday for US. Friday closes early. So most of the action is expected today and tomorrow. And within that as well, it continues to be quite volatile is the expectation.
All right, we take that point, Manisha. The good part is that the OPEC meeting, which usually happens in Vienna, now happens online. So you won't feel that bad not being in Vienna and reporting from the studio itself. But for the market, we've given up some of the gains. So you have the Nifty just about holding in the green. The decliners have mainly been HDFC Bank. So that's the one that, stands out in terms of a downtick. And a lot of these two-wheelers. So the top losers on the index are Bajaj Auto at the low point. We have Eicher Motors, which is at the low point. We also have M&M and Maruti Suzuki. So it's more auto-led on the downside that we're looking at. And a bunch of these pharmaceutical names as well, Ipca and Lupin at the low point. But a bunch of stocks which are doing well belong to the defense space. And Nimesh alerted about those stocks earlier in his standout brokerage report. Let's revisit them. Nimesh, you pointed this out, and the stocks are actually moving out.
Well, yeah, so now all the defense names are buzzing in trade today, largely on the back of a big report from JP Morgan. They've initiated coverage on few names. So they have a buy rating on BEL with a target price of 340. They've initiated a buy on Hindustan Aeronautics as well with a target price of 5135. And a neutral rating on Mazgaon Dock with a target price there of 40 to 48. Now, for the sector, they believe that the sector represents a very long runway of structural as well as value accretive growth, largely on the back of few reasons. First being increasing capex. They foresee $150 billion of capex over the next 5 years versus $85 billion in the previous 5 years. That's a big trigger. Second being the increasing exports. They see a 46% CAGR over the next 7 years as far as export opportunity is concerned for the Indian companies. And third, a big focus on the domestic manufacturing, high ROCs, as well as strong cash flows. Now, all these stocks have corrected. So after the correction, JP Morgan believes it's a good entry point to get into these incumbents, largely because they provide a 15 to 17% EPS CAGR, as well as an ROE between 23 to 33%. So stocks have corrected, so the good entry point as per JP Morgan, and hence initiating buy on BEL as well as in HUL.
Okay, all right, got that. Nimesh, thanks very much. Those stocks indeed reacting favorably to some of those comments coming in from JP Morgan. We have to take a quick break right now, but on the other side, it's going to be time for our special segment. It's the economy. Lata today is going to be speaking to a whole host of experts on whether a return of a stable government with a strong majority in Maharashtra will provide a capex boost to the state.
Welcome to It's the Economy. It's a special show, this one. Maharashtra, India's largest industrialized state, saw two sets of governments in the last term of the state assembly, first led by Uddhav Thackeray's Sena and then by Eknath Shinde's Sena. Did the state lose out on investments? Now, with the state having a government with a stable majority, as also the same party as the centre, will investments increase? Joining me to discuss the state of the state capex in India in general and in Maharashtra in particular are Mahesh Vyas, Managing Director and CEO at the CMI, Centre for Monitoring the Indian Economy, Rajshri Murkute, the Senior Director at Carriage Ratings, and Anil Yadav, Director Investor Relations and former Group CFO at IRB Infrastructure. Gentlemen and Rajshri, thank you very much indeed for joining us. Let me start with you, Mahesh. You're the high priest of any data on capital expansion. What was the performance of Maharashtra? Did it do better than other states? Did it do better than its own previous record in the last 5 years when we thought we had a kind of a mishmash government?
Well, Maharashtra has always been one of the better performers on the capex front. It has a lot of investments in manufacturing, and it competes with states like Tamil Nadu. But Maharashtra has been on top, and it hasn't lost that position much, really. There's competition from Gujarat and from Tamil Nadu, but Maharashtra has done well. It continues to do well. It is the top state in terms of attracting investments, in spite of the political upheavals, ups and downs. And by the same measure, one can say as investments in the country are not doing too good, Maharashtra takes a hit because of that as well.
Okay. Well, we were just playing the data from CMI on projects completed and projects I think new proposals and projects completed. New proposals, Maharashtra continues to go up with 21% of the share, but in projects completed, it has fallen year on year. FY23 was 21.69, according to CMI data, fallen about 10 percentage points to 13.69. So was completion hit, you think, or are these ups and downs common, Mahesh?
Yeah, that's not a big deal. You will see a lot of investments coming through in 24-25, in the first half of 24-25. So I think Maharashtra did very well in 21-22. It did come down a bit. One cannot expect the graph to keep on rising continuously in these projects because many of them are very clunky projects. They are big projects. So one shouldn't read too much into the fall in 23-24. I see a little pickup in 24-25.
Okay, good. Let me get Mr. Anil Yadav, the man who's actually on the ground on this issue. Mr. Yadav, was there any delays in completion because of, it took time. The government was preoccupied with other things or perhaps did not have such a stable majority. Did you have any slowdown in decision making in the previous 2-3 years?
I think if you look at the last 3 to 5 years, largely the capex on the road sector was funded by the government, either through EPC or HAM project. And we are not bidding for the EPC and HAM. Accordingly, it will not be appropriate to comment on that side. We have few projects in Maharashtra, that is Mumbai, Pune, and plus 3 more BOT projects. But in terms of the traffic growth, it was, if you talk about last 6 or 8 months, it was muted because typically we have seen during the general election, the activity is on the lower side. And I think with a stable government and now clear mandate in Maharashtra, we should see a growth in the traffic in the coming quarters.
Okay. You have a lot of projects in Maharashtra. Many of them are funded by NHAI, but some are funded by the state government. For instance, the HUL bridge was funded, I believe, by the state government. It was not an NHAI project. Is there any difference in terms of speed of permissions when you handle a central government project and a state government project in Maharashtra?
The HUL project, HUL Setu project, which you are talking about, again, it was an EPC project, and we were not party.
Okay.
We predominantly bid for the BOT and the TOT projects.
Okay. Thanks for that. Rajshri, I know you look at a large amount of data, but largely national capex like the CMI. What has been Maharashtra's record in the past 5 years, you think, compared to itself and compared to other states?
Thanks, Lata, for having me on the show. So, CAPEX trends are something that have been pretty central and a very important indicator for economic development. And we at Care Ratings also do track this data pretty closely. So, in recent, just early this month, when we published, a report on the CAPEX, what has come to our notice is, like in the previous years, Maharashtra continues to remain at the, front end in terms of project announcements, basically in terms of investments announced in the state, as well as in terms of completions. More pronounced, if I have to pick up for first half this year, the first half of FY25, the number of projects which have been announced in state of Maharashtra that have increased to close to about 35% of the overall investment projects announced, amongst all the 20 major states. Vis-a-vis at FY24, this number would have been closer to about 20%. So to a large extent, it does indicate that, the investment rigor and the focus continues to remain strong in the state. Secondly, when we look at the other important metric, as you also mentioned some time back, in terms of the project completions. So there as well, we do notice that in H1 FY25, Maharashtra continues to remain leading the pack in terms of project completions, close to about 19% of the overall 20 major states that we have been tracking. This number was close to about 14% for FY24. So all in all, what we observe for Maharashtra is not just the manufacturing sector. Infra has been a fair bit of central focus for the state, and the recent big marquee projects which have been announced, that should bolster some additional activity in the state for some more time.
Okay, so in short, do I understand that Maharashtra has done well, and done well even in the last 6 months when supposedly it was a lame duck government? So that's a very big takeaway. Mr. Yadav, therefore, would you say that state governments don't play a very active role? I know you're not interested in EPC, but more generally in your experience, the decision making happens because of the bureaucracy, and it's not really stalled too much by state governments. Would that be a fair assumption?
Yes, definitely. Typically the large portion of the infra project comes from the center, and that activity typically continues. And this time the central election and the gap between the central election and Maharashtra election was only 6 months. So there was a lower activity as far as central awarding agency is concerned. But in terms of the Maharashtra government, we have seen the award activity even pre-election as well, though those were the EPC project, but there were award from the Maharashtra government.
Okay. No, I mean, there is very clear data even from the government to show that the first half of the current year, there has been a year-on-year fall in CAPEX, both at the center and at the state level. Mahesh, what is your assessment of the CAPEX cycle itself? If you take everyone, central PSUs, private sector, as well as government-owned like NHAI kind of projects, where is the CAPEX cycle? Has it picked up? How does it compare, say, to the previous 10 years, say from 2010 to 2019, pre-COVID?
Okay, we ain't doing very well. So we began the year, this fiscal year, with the elections, and therefore the new investment proposals slowed down understandably, and so did completions. Since a lot of the CAPEX movement in the recent past has been government-driven, one could understand that elections and restrictions around that period leads to a slowdown or a substantial slowdown in the announcements and in the completions. But what is disappointing is that September quarter also turned out to be bad. It is quite low in terms of new investment proposals and completions both. The quarter was better than the June quarter, but still it was quite low compared to all other quarters since the pandemic. So the pandemic was, of course, a meltdown, and this second quarter was not very enthusiastic, was not very enthusing. And we pushed the envelope a little and see what's happening in October. and in October it turns out to be even worse. So the new investment proposals, for example, is less than $1 trillion, when the average is much higher, like 6 trillion, so 2 trillion in a month approximately, and we are seeing like it was 0.53, so maybe revised up to 0.7 later on. But new investment proposals are very low, and the completions also are largely delayed. So one could blame the central government elections first, then one can blame the Jammu and Kashmir and Haryana elections, then one can blame the Maharashtra and Jharkhand elections, but you can't keep blaming this, and investors should not be so captivated by the political cycles.
Okay. Yeah, so it's something more. It's probably animal spirits. It is possibly the capacity of the economy to absorb more investments. Maybe we have to worry about those things. A quick last word from you at CareEdge, Rajshri. Would you agree that the capex cycle is not as robust as we have seen in previous cycles?
Sure, Lata. In fact, that's where we also concur pretty closely. In terms of the capex cycle, both central as well as the state capex, both have kind of faltered from the previous achievements which we have seen in the past. Adding to, the first quarter, which was largely a meltdown or a restriction which we noticed from the general elections, Q2 saw some green shoots in the central capex, but on an overall basis, for H1, we've observed that there is a contraction in the central as well as state capex by about 15 to 10.5% on a YOY basis. So hopefully this now should kind of rest, but yes, we are still short in terms of our achievement.
I take your point. The CareEdge data very clearly says that both center and state capex is down about around 30%, 28% from year-ago levels. Sorry, I think 10.5% for the center from year-ago levels. And likewise, central public sector units are also contracted their capex by about 10.8%. Thank you very much, Mahesh, Rajshri and Mr. Yadav. The key takeaways are that the state government, neither the previous innings nor the expectations of a strong majority have got much to do with capex. Maharashtra continued to do well even in the previous system and is expected to continue to do well. But overall Indian capex has a spot of bother for our experts. We'll wrap up on Bazaar on that note. Stay tuned. Chartbusters coming up.